on the political, economic, and socio-political space continues. Welcome to a brand new month of December 1st, 2020. Wishing all our viewers across the country and across the globe a very fruitful month of December. It's been an eventful year, and this is the last month of the year, and definitely a lot to reflect on. But today we continue our conversation around the oil and gas sector as we do every Tuesday morning, and our discourse focus will be on the National Gas Expansion Program, unlocking a gas-led Nigerian economy. Let's give you the outline of what we'll be looking at today. The rollout of the National Gas Expansion Program. We're looking at the 4th National Council meeting of the Federal Ministry of Petroleum and Natural Resources. We'll give you some global oil and gas updates. And we'll take a look at the 180th OPEC meeting and 12th OPEC and non-OPEC forum, which started yesterday. And of course, the US took strong steps in sanctioning China's national oil company drilling operations in South China Sea. We'll give you some updates from that development. Let's begin with the big story to kick off the month of December 2020. Today is a significant day in the oil and gas industry as President Muhammadu Buhari, GCFR, who is substantive Minister of Petroleum and Natural Resources, will perform the official virtual rollout of the National Gas Expansion Program today by 12 p.m. This marks a major step in developing the gas framework and strategy in Nigeria and is a welcome development to the industry. President Muhammadu Buhari is also expected to make some very strong remarks on how this will help to transform the economy. According to Mr. Effiong Okon, the Operations Director of Seplat Petroleum, gas development has significant multiplier effects and benefits to Nigeria's economy. Building institutional capacity to drive transition is critical to deliver and sustain the gas revolution. So indeed, today we expect that critical step and pipeline to boosting our gas infrastructure as the NGP is officially rolled out today virtually. Another very interesting impact of this year's COVID pandemic and how it's making everything virtual. Updates will be coming on that development, and hopefully we'll get that across in subsequent editions. But that's a major story today, the NGEP. Long-time work carried out on it, and now it's going to be a reality. Last week, the 4th Council meeting of the Federal Ministry of Petroleum and Natural Resources held in Bayelsa. Bayelsa State is in South Nigeria. The Minister of State for Petroleum and Natural Resources, Mr. Timi Presilva, chaired the forum with the permanent secretaries, directors, and CEOs of agencies and parastatals under the ministry in attendance. It held at the Nigerian Content Tower, Yenogwa, a multi-faceted complex which was commissioned this year and sitting the National Content Development Management Monitoring Board, NCDMB, office in Yenogwa. It was an opportunity to discuss how the ministry can reposition and prepare not just this year, but ahead of the 2021 fiscal year, amongst other developments and operational reports that was tendered during the meeting. The Ministry of Petroleum and Natural Resources plays a coordinating role in steering the activities of the oil and gas industry and brings effective regulation and efficiency to the sector, as this is our major source of revenue, as Nigeria also continues to seek pathways to diversifying its revenue base. So whatever happens in the oil and gas sector remains very critical in Nigeria. Let's get on to what's happening in the global space. A lot has happened, and we just want to give you some snippets of that across the globe. First, we begin with the fact that Exxon has cut its long-term oil forecast. ExxonMobil, as you know, is a major global oil giant among the top 5 and is listed in the New York Stock Exchange, amongst others. ExxonMobil lowered its long-term oil price forecast, although the numbers have not been made public. According to the Wall Street Journal, Exxon Brent's forecast for the next 5 years has been cut from 62, a 2019 estimate, to between $50 and $55 because it could prompt a substantial asset write-down. Exxon has hinted that it may need to write down as much as $30 billion. That's a huge amount. But in Nigeria, particularly in the south state, Akwa Ibom. Let's get on to Petrobras, one of the best efficiently run state oil company in emerging markets, Brazil. Petrobras is also cutting its 5-year spending plan by 27% from a year ago, lowering it to just $55 billion. This again brings to the fore the impacts of the global pandemic and, of course, the oil shocks on the state and private sector-led oil and gas companies. It's not been an easy year for oil and gas companies. It's been a very turbulent, challenging year, and so write-downs, asset write-downs, looking at assets to dispose, and even various ways to cut down costs has become among the options for oil and gas companies. So for those who watch the oil and gas developments, it's just more of a cautious step in this period. And one of the major oil producers in the globe, Venezuela, is set to resume oil exports to China. This year also has been very challenging for Venezuela, who, like Nigeria, has its major revenue earning from oil and gas. Venezuela has commenced direct oil shipments to China after going underground for more than a year due to the US sanctions. So Venezuela is getting back on board after a very, very, like I said, tumultuous experience as a country. For the US, its shale bankruptcies are accelerating despite the pandemic protection. North American oil producers and oilfield services companies are going to be filing for protection from creditors at the start of the fourth quarter of this year. Law firm Haynes & Boone said in its latest tally to the October 31st last week, oil and gas operators in the US have been going through a real challenging time, apart from cutting down their workforce and cutting down their forecasts and even lowering their investments. They are still trying to navigate the challenging phase, particularly the US shale production. So it's been really a challenging year also for North American oil producers. And this again sums up what 2020 has brought, a year of immense challenges and also showing a new direction on how renewables may become the new big thing after crude oil. Speaking about renewables and, of course, its impact, Tesla, you've heard that big story. Tesla surpassed a $500 billion market capitalization. Elon Musk, you know, is the founder and, of course, key player in Tesla. The market capitalization hit $500 billion earlier last week and quickly moved to close at $550 billion last week, Friday. This is Tesla that was going through huge, immense challenges. And according to some reports, Elon Musk, the founder, had to go through a very stretchy work experience in his office just to ensure that things worked out. Now, it's like the toast of the period, but also brings again to the fore how renewables will become the new big thing. While we're discussing write-downs, asset sales, and considerations to cut down forecasts and even investments, Mozambique's liquefied natural gas may be getting some very good prospects as ExxonMobil and Total are in talks over the venture. The discussions over the massive LNG project in Mozambique is looking at extraction from both companies who are aiming to extract natural gas from a shared field. According to reports from Reuters, they want to use the cheapest gas first, which is the straddling resource. So if that is the case, then Mozambique LNG can be smiling because that will be a very huge investment and meets a challenging year in the oil and gas sector. So definitely it will be something to look at. Let's look at the major story for this week, which is the oil producing exporting countries. As at yesterday, the oil price was down in Asia as investors had been waiting to see if OPEC will extend supply caps past January next year. Brent oil futures fell 0.7% to $47.83 by 11:26 p.m. Eastern Time yesterday, which is about 3:26 a.m. Greenwich Meridian Time. And crude oil, West Texas Intermediate futures slid by 1.05% to $45.05. Investors will be awaiting the outcome of the OPEC and their allies, OPEC Plus, 2 days meeting, which will be ramping up hopefully by today. Investors are very wary of the outcome, as the usually monolithic bloc has been showing signs of internal dissent. The 180th meeting of the OPEC group and the 12th OPEC and non-OPEC ministerial meeting have been expected to extend oil supply quota cuts beyond their current expiry date in January 2021. However, several members, including the United Arab Emirates and Iraq, have been pushing to allow the restrictions to expire, as their oil-dependent economies have been feeling the pinch of both low prices and low production volume. And Nigeria is not exempted. Nigeria is also feeling the effect of low oil price and low production volumes. It's not really been an interesting period for OPEC. Don't forget, OPEC Secretary General is a Nigerian, Dr. Mohammed Barkindo. So we'll be monitoring developments at the end of that meeting. Statements from him will be very critical, the direction of the crude oil price markets and of course production. And that will again also shape how the year will ramp up to see the outlook for next year. Speaking about territorial prowess and of course operations, Bloomberg reports that China's third biggest oil company faces a US blacklist, which could spur major outflows from its Hong Kong listed unit after years of involvement in offshore drilling in disputed South China Sea waters. China National Offshore Oil Corporation, the nation's main deepwater explorer, is among 4 companies to be added to a list of firms owned or controlled by the Chinese military. The move comes as the administration of President Donald Trump plans several new hardline moves against Beijing in the final weeks of his term. For those of us that follow, we know that it has not been a rosy relationship between the US and China ever since President Donald Trump took over in 2017. CNOOC hasn't yet received any official notice of decision from any relevant US government agency. The firm's listed unit said in an exchange filing in Hong Kong, the company is closely monitoring the development of the situation. CNOOC is the smallest of the China's so-called Big Three state oil majors, after China National Petroleum Corporation, CNPC, operations in South China Sea. Within 200 miles, it's CNOOC that got targeted and not CNPC or Sinopec because of the drilling in the South China Sea area, which is deemed as a so-called military action by the US. Lin Bokang is the Dean of China Energy Policy Research Institute at Xiamen University in southern China. US investors held 16.5% of the shares in CNOOC's Hong Kong listed units as of Friday last week, creating potential for major outflows if they are forced to divest their already stated investments, according to Henrik Fong, an analyst with Bloomberg Intelligence. President Donald Trump of the United States signed an order this month barring American investment in Chinese firms owned or controlled by the military. The unit CNOOC of the big one, the National Gas Expansion Program. Today we're looking at how that NGEP can unlock opportunities for Nigeria's gas. It will strengthen the gas to power framework. If there's any infrastructure that Nigeria honestly needs to work for the citizens, it is the power sector. There's enormous gas resources, particularly in the South region, and this expansion program should also help in that framework to really boost expansion in terms of the ability to utilize it for our most cherished infrastructure. The next is that it should encourage a gas-led industrialization. This has been the discussions across board. Oil and gas producing nations are beginning to see the value of strengthening their gas industrialization prospects, and Nigeria must not be left behind in this prospects of developing a gas-led industrialization. Next of importance, which must be taken seriously, is driving innovation in the gas industry. Considering the billions of cubics and of course the scopes that are coming through production, various investment by oil and gas companies, innovation is going to be very critical. And with this NGEP, it provides an opportunity for Nigeria to take advantage of that to boost innovation and even explore technology inputs in developing its gas industry and process. This will also help as we see various ventures like Nigerian liquefied natural gas provide renewed vehicles to boost its industrialization and activities in the economy. And so hopefully we'll see new innovations and strategies in place to boost the industry. Next is to unlock the immense opportunities that abound in the gas industry. There are enormous opportunities and value chains that can be really, really developed through this initiative. Particularly of interest is the LPG, liquefied gas, and of course improving gas cooking materials, the gas cylinders, making it accessible to homes and households. This should also help in that regard, and we're expecting to track how this will begin to take shape in the country, considering the challenges that households and citizens are facing, particularly in this recession period and challenging time. Also, we believe that this will reposition Nigeria on the pathway to a gas-led economy, like we said. We've enjoyed a lot in terms of the crude oil regime, the oil price, but we've been very vulnerable to the shocks that this has brought. But gas provides an opportunity for Nigeria to reinvent itself. We have huge deposit of it, and if we effectively harness it to build a gas-led economy, then we can take a leap from what we're seeing in Qatar, United Arab Emirates, and even Saudi Arabia, who are also taking that path as oil-producing countries. So there is a lot that can develop from there. We will also see more activities in terms of gas packs. There are several ventures in that regard, particularly in the South region, and we hope to see gas packs and development of that in Nigeria, which will help our industries in their operations. It is very important to emphasize that the fuel choice for transportation, that's the LPG, is going to really help in boosting Nigeria's diversification, even in the oil and gas. Like I said, we've been very dependent on the crude oil and the oil space, but gas presents to Nigeria a huge opportunity for diversification. And so it's kudos to the team that have been part of this whole process. But again, it is a huge job to take up. This will help to facilitate the growth of Nigeria's LPG consumption from the current 500,000 metric tons per annum to over 5 million metric tons per annum within 10 years. This, of course, is where Nigeria is pushing itself to. Imagine having to drive an LPG car. Imagine how many households will embrace liquefied petroleum gas in terms of using them for cooking, over 14 million. Let's just project that. Imagine a subsector of the liquefied petroleum gas creating at least 2 million jobs for Nigerians. Just peg 2 million jobs for Nigerians. That begins to make an active economy, and we don't want to be left out of it. So there's a lot that we can benefit from this new step of the National Gas Expansion Program, and we just hope that this will mark a turning point for our nation and indeed move us to the pathway of development, leveraging the immense resource in liquefied petroleum gas for affordable energy and sustainable economic growth in Nigeria. And what better way to start the last month of 2020 as we begin to take steps to boost an economy that works for all Nigerians, creates inclusive growth, creates jobs, and also boost wealth creation for Nigerians. And that will be all for today's edition of the Economy and Politics Show. You can visit our website, www.prochng.com, to watch our videos, read our news reports and stories and articles. Also send your views and comments on what you think about the National Gas Expansion Program, and particularly leveraging a liquefied petroleum gas for affordable energy and sustainable economic growth. You can also, on our website, www.prochng reports, let's wishing you a very as we continue to provide you insights on developments in the socio-economic space. Till we come your way again, thank you for watching. Have a nice day and stay